Scott Bauer is joining, the CEO of Prosper Trading Academy, from the floor of the CME here in Chicago. So, Scott, the two have been moving pretty closely together the last couple months.
Yeah, they sure have.
But I gotta say, these past 5 days, it's kind of breaking down a little bit.
Well, I think what you've seen over the last 5 days, if you want to break it down that small,
Yeah.
is that gold has traded really in a very small, relative, minute movement, where we've seen Bitcoin all the way up above 13, back down to 12, up again, and now back down. So a little bit more volatility there. But much like you said, though, this is the highest correlation that we've seen with gold and Bitcoin since 2016.
No doubt about it. You put it on a 30-day, you put it on a 10-day, it's there and it's strong. Yeah. I'm totally with you. My question is, we figure out what's causation, what's correlation, though, is on a day like today, right? We've got the market saying the Fed just confirmed a July cut. The first thing I looked at when I saw that testimony was /GC. The gold contract shot up in response to that, but it seems like Bitcoin's got Bitcoin things going on that maybe don't really pay attention to the monetary policy stuff.
Yeah, and there's no question. It went like this. They diverged when that came out today. However, let's give it a day or two, because Bitcoin has been so volatile. If it holds here at this 12.1, 12.2 level or so, we may see it rally back to 13. By tonight even. However, that being said, it's still way too early, Oliver, in Bitcoin and the blockchain. It's still too early to really draw a conclusion about the correlation between digital assets and anything, whether it's gold or not. It's easy to look and see that, yes, since the monetary policy worldwide has been easing, we've seen them both rally together. No doubt about it. But it's still really too early. We're just a few years into this whole thing trading, and you know what? It's anyone's guess whether this could be 5,000 or 25,000 in the next 2 months. We know gold is going to be in somewhat of a range. Whether it breaks out above 15 and maybe moves to 1550, or it backs off down to 13, we have a pretty defined range for what gold is going to be over the next 3 to 6 months, maybe the next year even. Yeah, we don't know about that with the digital assets.
I think it's a great point, because there's a risk and reward for each that's very different, right? When we've got traders watching that are saying, okay, I think the Fed is not just going to cut once, but they're going to have to cut twice, and the ECB is going to stay easy where it is. I want to hedge that, or I want to play that, negative yielding. Do I do it through gold, or do I do it through Bitcoin? Well, you might be more sure you get the move in gold, but if Bitcoin continues the correlation, you can get a lot more of that move, right? How do you talk to clients about this when they come to you with a question like that?
Yeah. It all comes down to risk tolerance. Bottom line, if you have the appetite and you don't get nauseated at the big moves all the time, and you don't mind seeing Bitcoin go up $2,000 in a day, or getting spanked and going down $2,000 in a day, if you're looking at it like that, obviously the rewards are on the Bitcoin side. However, with the higher probability of that volatility comes the probability that you're going to get beat up also. So my clients that I talk to, I like for them to be in the digital currency space a little bit. Very, very small portfolio, probably 1% to 2% overall portfolio, and that may even be a lot. However, with this environment, it's hard not to have some of your portfolio in gold, like we just talked about. If there's a sure bet out there, at least of a range, you got to go with gold. However, you have that volatility and the chance with the digital assets and Bitcoin.
Because that kind of makes sense to me. I like what you're saying, which is determine maybe step one, what kind of exposure you want to have to the rate cut policy play, if you want to call it that, right? And then maybe within that, divvy it up, say, all right, well, if it indeed goes my way and we get more cuts, or the market seems to need a solid thing that you don't have to pay for, right? Bonds right now, you're paying to hold a lot of bonds. So then once you figure that out, say, all right, well, here's what I'll do in gold. I know it's going to go a direction probably if rates go down. And then Bitcoin, maybe another portion in which, if it does go that way, boom, you get obviously a big payoff to it.
And listen, I mean, where are rates going from here? Whether we get 1 or 2 more cuts, and it's pretty certain that we're going to get 1, but what happens after that, we don't really know. But where are rates really going to go from here? If they start cutting more than that, and I don't think it's necessary whatsoever, I think panic actually sets in, because then bigger macro picture, another discussion we could have at another time, then it's like, okay, wow, the house is falling down. Now what? Now I think you'd see a liquidation in the big risk assets like a Bitcoin and not in gold. I think that's where the big divergence could be, is if the Fed makes accelerated cuts.
Now, I think this is an interesting point. The last thing I'll let you give you the last word on this, Scott, of course, is the kind of risk-on move today, right? Which is, what do you look for to see if there's any froth that starts to build up too much? You know, we're at S&P 3000, and P's are inching back to 20.
No question about it. But you know what? We also have earnings coming up. I mean, everyone's just focused on the Fed. But honestly, the bigger macro picture here is what's going to happen starting next week, even with the banks, and continuing on with the next earnings cycle. So to me, that is more important in the longer run, the next 3, 6 months, 9 months, than what the Fed does over the next couple weeks.
All right. I like it. Scott Bauer, nice hit. Good analysis.
All right.
And fun, as always, talking some BTC and GC with SB. Scott, joining us from Prosper Trading Academy.